second quarter, that is, market share sequentially increases from 13% to 20%. The management tells CNBC-TV18 they saw record revenue and EBITDA in the second quarter, and growth will be maintained going forward despite muted festive demand. That fires up the stock.
Shree Cement's second quarter numbers misread expectations. The volumes and the blended realizations disappoint, while the EBITDA per ton comes in at 28 quarter lows. The management remains confident of 10% volume growth in FY23, says that demand is likely to improve from the second half of November.
Tata Elxsi sees cuts of over 6% after constant currency revenue growth drops to 4.7% compared to an average of 7% over the last 4 quarters. Just Dial's revenue, however, crosses the 200 crore mark after 10 quarters. EBITDA too improves over the last 2 quarters.
Butterfly Gandhi Mati slips after the profits, revenue and EBITDA all fall in the second quarter. Margins to contract. Oberoi Realty 2 slips after the debt rises by 460 crore rupees to 2,000 crores. Net cash flows is at its lowest in the past 12 quarters.
Consumer durables and electronics retailer Electronics Mart makes a stellar debut on D Street, lists at a premium of over 45% to its issue price of 59 rupees a share.
Well, hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me is Mangalam Malu. Well, Mangalam, it's a good start to trade, right? Everyone was talking about the US markets ending in the red, but as we mentioned earlier today, it seems that the Indian markets preempted that maybe there'll be some trouble or some turbulence in the US markets. And as we speak, actually, we're at a very, very crucial juncture because we're on the verge of moving above the 20 DMA on the Nifty itself. So let's see whether or not we can get past that. Remember, in Friday's trading session, we got past that intraday, and then, in fact, we did give away the advantage. So keep an eye out on that mark. The 20 DMA, we're exactly at that spot, 17,240. The bulls will like to take the market a little bit higher from here and trade above the 20 DMA. But let's find out, from our expert. We have Shilpa Rao who joins in. Hi, Shilpa. Well, I recall the last time around when you were saying the Nifty is likely to see a bit of a correction. We did get that. We moved all the way to around the 16,950, but we bounced off there. Shilpa, what's your view at around this 17,240 odd? Do you believe we have enough to head back towards 17,500? Or do you think we're likely to go and retest the recent lows?
Good morning, Nigel and Mangalam. Like I've always been mentioning that Nifty is in the range of 17,000 to 17,400 now. So either side, a decisive breach and sustenance will see a further 200 to 300 points up move or down move. So for now, 17,200 if it is holding, then for intraday also you could look for targets of 17,350, but the condition comes that 17,200 should hold. Likewise, Bank Nifty, it is approaching 40,000 right now, which is the resistance. So I would suggest not to jump in for a fresh buy right now and wait for intraday dips again towards 39,500 or 39,400 zones.
All right, we take that point, Shilpa. But on Friday as well as today, what's standing out is the way the mid-cap index is underperforming. In fact, over the last few trading sessions, we've seen the mid-cap index underperform the large caps. And that usually happens when the street has no confidence over up moves sustaining on, the large cap indices, or at the same time, maybe a risk of further downside from where we are right now. What do you make of individual stocks and what do you have on your list?
Correctly said, Mangalam. Actually, Nifty is definitely moving in the range, but yes, the selling pressure on higher levels is very, very brutal. On Friday, we saw 17,350 odd. We tried to manage. We opened gap up, but then again in the last hour of the trading session, we gave up all the gains. So that means that there is some sort of weakness looming over, and VIX is also, hovering around 20, which is definitely a cautious stance. So for me today, of course, I'll be having 2 buys, and Bank Nifty, since it is performing very nicely, so my buys would be from Bank Nifty, one would be from IT sectors, a contrarian, of course. For Bank Nifty, I would suggest, to go for Kotak Mahindra Bank. It is trading at 1850 zones now with a stop loss of 1825. One should look for targets of 1885 to 1900 zones. And another buy would be Tech Mahindra. It is trading at 1016 now. Look for targets of 1033 to 1048 with a stop loss of 1000 or maybe 999 on the lower side.
All right, we take that point, Shilpa. Thanks a lot for that. With that, now it's time to shift focus to our special segment where we get you ideas of profit coming in from our colleagues at Money Control Pro. Nandish Shah joins in.
Today's ideas of profit is Varun Beverages. Varun Beverages is one of the largest franchises of PepsiCo in the world outside of United States. VBL manufactures and distributes a wide range of carbonated soft drinks, non-carbonated beverages, including packaged drinking water, while PepsiCo offers brands, concentrates, and marketing support to VBL. It is in the process of setting up a large greenfield plant in 4 states, and by the end of CY23, this capex would increase capacity by nearly 30% for CSD and juices segment at a cost of rupees 1,200 crores. At the optimum capacity utilization, the incremental revenues would be 2,600 crores. VBL has expanded its overall distribution to more than 3 million outlets, including 0.25 million in the international market. The management is also targeting 8 to 10% of incremental distribution expansion every year, which will support higher volumes. With greater focus on underpenetrated markets, the growth rate for VBL is likely to be higher. The management has guided for double-digit volume growth going forward on the back of strong demand in energy drink, juices, and milk-based beverages. We remain positive on VBL given the various strengths it has developed and the ability to garner higher market share in some of the lower penetrated territories of South and West India. Based on our projection, it is currently trading at a P multiple of 30 times CY24 earnings.
Welcome back. We've moved to the high point of trade as far as the markets are concerned. Crossed that 20-day moving average on the Nifty quite comfortably, actually. Now we're up above that 20-day moving average by a good 40-odd points. Remember, at the start of the show, the Nifty was at 17,240. Now it's a 40-point bump up. And all of that, almost all of that can be attributed to the Nifty Bank, which is up 511 points. And all of Nifty Bank's gains can be attributed to HDFC Bank, which after a good set of numbers is continued to move higher, currently at the high point of trade for HDFC Bank. Giving it company are a couple of other private banks as well. Kotak Mahindra Bank, for instance, is at the high point of trade as well. And HDFC Limited, which is not part of the Nifty Bank but has a fair weight on the Nifty, is also up by almost 0.8% at the high point. So net, all these three counters taking the Nifty comfortably above that 20-day moving average, and the Nifty Bank with a gain of 500 points. So that's about the market right now, but we also have an NCD opening for NHIT, or National Highways Infra Trust. It's a 750 crore rupee NCD, which has the option to be going ahead and increasing it by another 750 odd crore rupees. What's the purpose of this NCD, the returns it could provide to investors, etc.? And to get an outlook on the NHAI order pipeline going ahead, we're now joined by Suresh Goyal, who's the MD and CEO at National Highways Infra Trust. Remember, it is listed on the exchanges under the InvIT route, and currently is trading at a price of a little over 110 odd. Thanks a lot, Mr. Goyal, for joining in. First up, if you could tell us what is it that you will do with the money that you will get? How much more are you looking to invest in terms of getting more assets? And what is the kind of annuity that you will receive from the assets that you will add onto your books because of this?
Right. First of all, good morning to all of you and all the viewers. Pleasure to be speaking with you. So we have come out with this issue which opens today as part of the National Monetization Pipeline. So though I'm sure all of us are aware that the government has a very ambitious target under National Monetization Pipeline, and the capital that is being raised would be used for further development of Indian infrastructure. Within that, the National Highway Authority of India has the largest share at 26%, which works out about 1.6 lakh crore rupees. That's a pretty large number. So our InvIT, National Highways Infrastructure Trust, or NHAI InvIT, was set up a couple of years ago as a mode of monetization of assets. We raised 8,000 crores last year, and now we are in the market to raise another 3,800 crores, which is to raise capital for the 3 roads that NHAI has offered to NHIT. The purpose of this fundraise, which is through the NCDs of 750 plus 750 crores in aggregating to 1,500 crores, is to part fund that. We would be looking forward to raise more capital as NHAI transfers more roads to its InvIT, because NHAI has perhaps the largest share of operating national highways which need to be monetized. And NHIT's success thus far gives us confidence that we will be able to raise more capital and help the National Monetization Pipeline. All
right. Hi, Mr. Goyal. Thanks so much for giving us some color on that. You're going to be looking to raise more capital. Could you quantify how much is that, and by when will you be looking to raise additional capital from here on?
So it is already in the public domain that that NHI has given us another round of roads, which is what we are calling as round 3. The work on that will start next month, and that we hope to complete by March next year. So as of now, they've given us another 5 roads. Just to set the context, we got 5 roads from NHAI in the first round,
right,
which is aggregating about 390 kilometers.
Right.
And the current round is 3 roads, which is in distance terms aggregating to 247 kilometers. And we do expect that about a similar size would be there in round 3 as well, for which we'll be raising capital.
So
in the prospectus just to conclude, in the prospectus that was issued in round 1, NHI has said that in addition to the first round, they will be looking to give us 1,500 kilometers of roads over a period of 3 years. So that's a kind of a bookend as far as next to 3 years plan is concerned.
Right. So, just to take that point forward itself, from an investor's standpoint, what is the kind of annuity these current 5 roads that you have generate? And incrementally, with the more roads that you will get in the second round and the third round, what is the annuity potential of that? I mean, we just want to understand that from the perspective of the kind of money that the company can annually generate and distribute to its unit holders.
Yeah, that's a very good question. So the roads that have been given to the InvIT are in the nature of toll roads. So they are not annuity roads as such. They are toll roads in which the trust tolls the traffic on these roads. These are concessions. In the first round, it was 30 years. In the second round, it is 20 years. So overall portfolio has a weighted average of circa 25 years of concession period. We are able to toll these as per the terms that are set out in the concession agreement. And just to confirm to our viewers that these are standard concession agreements that are there for all the toll roads in the country. In aggregate, this year, we are expected to earn a revenue between round 1 and round 2 put together for FY23, circa 800 to 850 crores, with first round being about 550 crores and the second round being about 330, 340 odd crores. So that's a kind of broad numbers that is about the size of our business as we speak. In terms of toll roads, and this is important for potential investors looking to invest into this NCD, that toll roads as an asset class, and globally infrastructure is a very large asset class, and toll roads perhaps are the largest asset class within that in the world. The toll that we collect from the users has got 2 components. One is the traffic, and the second one is a tariff. And both of them are expected to grow in the future, given that the traffic is growing as the country grows, and the tariff has got a inflation pass-through. Yes. So that is why, as we sit at a time when the inflation is high, these are good asset classes to invest into.
Okay, that's about the rate. It'll go up. I mean, in a highly inflationary environment. But could you give us a sense about traffic? What is the kind of growth are you looking at? And also post the implementation of FASTag, must have got some legs, right? How have things improved?
FASTag has been truly transformational. So let me take the second part first. Second part of your question first, but this is just more exciting part of it. Just like UPI, FASTag has been truly transformational for the road sector and for the country also, because the efficiency that has brought in has been just phenomenal. So currently, all the toll plazas across the country have FASTag. I'm sure you and I and others have used them, and we are quite satisfied with the way they work. Circa 98% of the total revenue collected currently in the country as well as in our portfolio is through the FASTags. And given that these provide absolute transparency and almost real-time information, as well as a very, very data-rich information about the kind of traffic that is going on these roads in terms of categories of vehicles, in terms of trip lengths, passes, single trips, etc. Is just phenomenal, because we will be able to harness this as we go forward. Right. So that's around the FASTag itself. Now the first part of your question was around what kind of growth numbers. See, something that we don't really talk about is that the national highways carry 86% of the passenger traffic in the country, and roughly about 2/3 or 66-67% of the commercial traffic.
Right.
Now that is like really phenomenal when you look at what the the importance of national highways in the country as far as economic progress is concerned. In our portfolio, which is 8 roads, they are located in GQ and North-South-East-West corridor. The share of commercial traffic is higher. Our share of commercial traffic is 80% plus. So there is a very high degree of correlation to the GDP. So as proud citizens of this country, if we believe that our GDP is likely to grow over a longer period of time, then we do expect the traffic on these roads would also be growing phenomenally well.
Take that point, Mr. Goyal. Thank you for the macro explanation of why highways are important, etc., and the kind of share that you have from commercial. But getting back to micros, and quickly before we let you go, running out of time, the distribution of the money that you generate, what proportion is ascribed for distribution to unit holders, and is that likely to increase going forward? And secondly, on this NCD that you've raised, can you tell us what the taxation policy is? Is it going to be exempt, or is it not going to be exempted? Because that would make a big difference to the kind of investments that people would make at 7.9% coupon.
Sure. So the waterfall for the cash flows after we receive the revenue is for paying our costs. And then after that, first thing is for meeting our debt obligations, including the interest and redemption of the NCDs that we are talking about. So they sit first in the queue above anybody else, and certainly above the unit holders. And that is what gives confidence to the investors who are likely to come into these bonds. These bonds or NCDs are giving a coupon of 7.9% payable semi-annually, and an effective annual yield of about 8.05%, which compares very well vis-a-vis fixed deposits and other similar instruments in the market. And mind you, these are extremely long dated, 25 years, which is what you will be able to lock in if you're an investor coming in today. After this debt servicing, then the available cash that is there is used for paying distribution to the unit holders. And as per SEBI InvIT regulations, 90% of what we get has to be distributed. Coming to your question around the taxes, these are not tax-free bonds, and I'll emphasize on that. These are not tax-free bonds, but these would be attracting normal taxes as in your tax bracket that you sit in as an individual when you make this investment.
Thank you, Mr. Goyal. Thank you for letting us in on your business. We'll have a longer conversation about the macros another time. Currently running out of time. Wish you a happy Diwali as well. Take a short break, come back, get you more on the markets and individual stocks.